Great.
Right. Can I ask you one more question?
Oh,
Go
sure.
ahead.
With regards to property in Canada, we still own a home in Ottawa and we own a home in Vancouver.
Oh, isn't that cool?
Isn't that cool?
Yeah.
We got both sides covered. If we decide we are definitely not going to move back to Canada and we determine that it's time to sell one or both properties, what are things that we should do before doing so?
Well, there's really nothing. There's nothing special you can do. Are they both rented at the moment?
Yes.
So you are filing a Form 216 for a Form 1159 and a T776 for each of those properties every year, correct?
Yes, that is correct.
Okay, and you're having that done now?
Yes.
And are you depreciating those properties?
Yes, we are.
Okay. Then when you sell them, within 10 days of the actual sale, you have to fill in Forms T2062 to report the capital gains on the properties, and you have to fill in Form T2062A to report the rental income for the current year and any recapture depreciation that you've claimed. And there are two forms, and they both have to be filled in. And on that form, the T2062, you cannot claim the real estate commission. So if you fill the form in, they have to be filled in within 10 days of the actual sale.
These are to Canada, David, or to the United States?
No, this is to Revenue Canada.
Revenue Canada.
And Revenue Canada, if you don't fill the forms in, the purchaser's lawyer has to withhold 25% of the gross sales price. So if you fill in the form, and let's pretend the sale price was $500,000, and the actual profit on the buildings is $200,000. If you fill in the T2062, they only have to withhold 25% of $200,000, which is $50,000. If you don't fill in the form, then they have to withhold 25% of the whole $500,000, which is $125,000.
Right.
And you and your husband both get a $2,500 penalty each for not filling in the Form 2062, because it's $25 a day for up to 100 days. And if you're late, then they charge you interest on top of that after they establish it. So you must fill in the T2062. The T2062A is what you fill in to calculate the recapture of depreciation and any rental profit you may have had in the year of sale. And you have to submit 3 past years of tax returns with those forms. And my recommendation, what I always do, is I give them a copy of every rental schedule since the first day that you were renting it, so you make sure that you've got to keep the rental schedules, because it makes them look after them faster. Now, Revenue Canada is so far behind in these things right now that in Kitchener, Ontario, it's taking them about 5 weeks to give you an answer on it. In Vancouver, it's taking about 13 weeks, and I don't know what the figure is in Ottawa right now. But where are you? Where is your place in Ottawa?
Place in Ottawa is in Nepean.
I'm sorry, say again?
In Nepean.
Oh, yeah, Nepean. Okay, so out in Nortel country.
Yes.
I have an office, or had an office, at 310 O'Connor and 327 Waverley. It's still got my name on it. I haven't owned it now for the last 10 years, but I bought and sold over 600 houses in Ottawa. Anyway, that answer your questions?
Yes, thank you.
Okay, thank you for
Thanks for calling,
too.
Rosanna.
Okay, bye-bye.
Bye-bye. And that was a good question about property out of the country and in the country and the California RSPs. And I'm David Ingram, and my guest has been Dan Walkow. And